Hello and welcome to the Global Dialogue. I'm Shireen Bhan. The world is going through immense amount of uncertainty. There is a health crisis, there's an energy crisis, there's an inflation crisis, and there are geopolitical flashpoints that we have to contend with. India stands out relatively as a much more stable destination. Joining me now for the annual India Investment Conference for his view on where things currently stand for the global economy and for India is JPMorgan's Jamie Dimon. Jamie, many thanks for joining us here on CNBC-TV18. Always good to have you back.
I'm thrilled to be here. Only sorry I couldn't be there in person because I very much enjoy visiting India every year.
Well, Jamie, before I talk to you about India, let me ask you about the state of the global economy. You said in June that we should be bracing ourselves for an economic hurricane. You weren't sure then whether it was going to be a minor one or a superstorm. As things currently stand, which is it likely to be?
So actually earlier than that I said we have storm clouds out there. I think those storm clouds that hit, you mentioned them. Like there's a lot of turbulence out there. And I was never trying to predict a hurricane. I was simply trying to explain to people that it could be a very modest storm, like it could dissipate quickly, or it could be a hurricane, and that people should be prepared for getting worse because we've never, this war, quantitative tightening, fiscal stimulation, the tension between America and China, these are just very serious things that have, bad economic outcomes.
Well, speaking of bad economic outcomes, are you now penciling in the worst case scenario, given the fact that central bankers have no choice but to continue to tighten? And what we have seen at this point in time is further deterioration as far as Russia and Ukraine is concerned, and further tension between China and the US over Taiwan. Are you now bracing yourself for the worst outcome?
No, maybe you'll be surprised, but when I said it in June, I expected all those things to happen. More inflation, higher rates. I talked about an unpredictable war. Wars are unpredictable. I still think the range of outcomes is a range, and you should look at it. I think a soft landing is probably a very small chance at this point, but mild recession, hard recession, they're all possible. And it's hard for me to give them odds, but they're all kind of possible. And remember, when I say get ready for it, I'm also talking to companies and investors where my real point is we're prepared for it so we can serve our clients. We're going to be serving clients in India regardless of whether it's a hurricane or a mild storm. And that's why I think people should be prepared. I'm much more concerned, by the way, about the humanitarian crisis, the war. These are bad things. Volatile markets we can all deal with. But there are a lot of people who are being hurt by these conditions around the world.
Oh, absolutely. In fact, the sustainable development goals, nearly every single one of them, we are off track, and it looks like the 2030 timeline is unlikely to be met. But, let's talk about India, Jamie, and it would have been nice to have you in India. But what's the outlook on India at this point in time, especially given what's happening around us?
Now, look, I think it's very good. Since I've been coming to India, I've seen a nation that's grown dramatically over time. Like we have 40,000 people there. It's the second biggest destination for technology for us. So it's very high tech. And so your education systems are excellent, a lot of things. But look, and you've done a lot of I've always said fabulous things like your biometric identification, opening checking accounts, trying to develop your infrastructure better, getting rid of bureaucratic regulatory burdens. It should be the fastest growing nation on the planet for the next 10 years. If you don't, it's because you didn't do all the right things. I think if you do those things, it's very bright. And you have people like America who want to be your ally and partner in many more ways. And then I think you have a little bit of a gift. This is not what I'm about to say is not anti-Chinese, but as every nation looks at and every company looks at supply chains, they're going to have to diversify more. And a lot of people say China isn't as secure a supply chain and therefore have to move manufacturing to somewhere, and I think India could be a huge beneficiary of that. You got to make sure the rules are right, the regulations are right, the capital is treated right. And I talk about rules and regulations, I'm talking about rule of law, bankruptcy law, tax code. If you get those things right, the world is your oyster.
Well, we have a lot of that already in place. Of course, more work needs to be done, but a lot of those reforms have already been taken forward. But Jamie, one of the things that the market is going to be watching very closely for is the possibility of the inclusion of the Indian government bonds in the JPMorgan Global Bond Index. And, the expectation is that we could hear a decision on that front sometime between September and October. Would it be a legitimate ask to have India as part of the bond index?
No, absolutely, you should ask it, you should fight for it. And I can't get involved in that because research is independent. So by law, but if I was India, I absolutely would be part of it. And if I didn't get in, I'd ask why. And then I try to accomplish those things, get in. And so I'm hopeful for you. And it is a sign of a country, coming, growing and becoming bigger and better well known. And once in indexes, the other thing it does for you, it's always out there. So you can get, you get a lot of foreign direct equity investment. This one you get also foreign direct credit investment.
Yeah, well, we are waiting for that decision. But, you talked about fund flows, Jamie, and I want to understand from you what the outlook is as far as fund flows are concerned into emerging markets like India, in light of the fact that we are now seeing the Fed hike and perhaps needing to hike even more aggressively. And what is the trajectory on rates that you are now working with?
Yeah. So, one of the things where I talk about those storm clouds is I said the one thing I can project with certainty is volatility in the markets. And because you can't have all this turbulence, this is going to go on for a while, yet you don't know where rates are going to change. The dollar is very strong. America is still strong. Is it going to be a recession? What's the real effect of QT and get rid of negative rates? Europe is probably going to recession. That creates huge amounts of volatility. And unfortunately, that kind of volatility, I mean, you look at emerging markets and the strong dollar, you have to go country by country. Some countries benefit from, don't get hurt as much from a strong dollar. Some benefit from it. Some sell commodities in dollars. Some buy a lot of oil in dollars. So it's literally country by country, what they borrowed, how much debt they have and stuff like that. But it does cause a lot of turbulence in the flow of funds. Markets can get pretty fickle, particularly when you're investing in emerging markets, venture capital, things where small changes in assumptions can change the value of what you think something's worth quite a bit. So they should be braced for flow of funds that they don't particularly like. And the other thing about the dollar is that an economy which is outperforming other people relative to expectations will probably have a stronger currency. And America is still outperforming, I think, what most people kind of expect, and that may go on for a while. So the dollar may not strengthen, but I'm not sure you're going to see it weaken either.
Okay. Talked about fund flows. Let's talk about what's happening as far as the stock markets are concerned. The kind of correction that we have seen in the global markets, India has been relatively an outperformer in comparison. What's the outlook as far as global equities are concerned in light of the uncertainties that you spoke of?
Listen, bond prices affect stock prices and dramatically sometimes. And you've seen some of that. I think that interest rates may have to go up another leg, another 50, another 100 basis points. That will have an effect on stock prices. It'll have much more of an effect on growth stocks than value stocks. And less of an effect in India, because in India, even though you have a lot of growth stocks, your growth prospects are so good for so long, it's just going to have a different effect on people investing long-term money in India. But to give you a shocking kind of number, 1% interest rates, $1 a year is worth $100. At 10% interest rates, it's worth $6 or $7. It's worth $10. And at 10% interest rates, 65% of the value is in the first 10 years. At 1% interest rates, something like 6 or 7% of the value is the first 10 years. So anything that has cash flows way out here, are going to be diminished in value by rates. And think of, by the way, Bitcoin, gold, certain types of real estate, raw land, venture capital, growth stocks where they're putting a lot of cash in now and hoping to get profits down the road. So these rates adjust everything differently, but they will adjust the value of all things.
You spoke about Bitcoin, Jamie. Given the kind of volatility that we're seeing there, what do you make of it? I mean, you've always been a bit of a skeptic, but do you foresee a significant decline from the levels that we're already at?
Yeah, I wouldn't use the word a bit of a skeptic. I would say a total skeptic. But that's about a crypto token that you call a cryptocurrency that does nothing. We believe in blockchain, DeFi, ledgers, and some of these tokens that do something. So if a token can do something for you, like it's part of a smart contract or it gives you information on a timely basis that you want, that's got value. I mean, we're one of the bigger users of blockchain. So, but what I'm pointing out is that, at higher rates, you have to carry the cost of it. It has no natural income from it, and therefore that will affect it.
Yeah. What impact is politics likely to have? You've got the midterm elections in the US, you've of course got the big political event in China, and of course the war continues, which is sort of causing instability across Europe at this point in time. How are you reading or looking at political developments in geopolitics and the impact and implications it will have on the economy?
You know, surprisingly, elections normally don't have a lot of impact on the economy like that year. But I do think this kind of geopolitical stuff you see now is a sea change of assumptions on what happened. So after February 24th, you know, I think that shattered the illusions of a lot of people that peace is at hand and that national security is kind of a given. And so geopolitics, it just elevated. And of course, Ukraine did a lot to hurt the relation between China and America. And so we now, the Western world, the democratic world, also has to think through what role it wants to play. You know, how important is it to defend democracy in this world? How, you know, are autocrats going to be allowed to get away with certain types of things? And, you know, India's got to figure that out too, by the way. So I would love to see the Western world in a mature, humble kind of way, get together, work with each other, create national security for each other around food and energy and other types of trade things, you know, keep the world safe with democracy. And I do think it's important. It doesn't have to be done against anybody. It should be done for ourselves. And it really should be done together. In terms of trade in the world, in terms of bilateral investment rights, opening up each other's countries. I think the world would be far better if we did that, we did it well. And I do think, you know, nations are doing a bit of that. And I think President Biden has done a good job coalescing some of that, particularly around Ukraine.
Mm-hmm. I want to talk to you about digitization and the competitive landscape in light of what we are seeing from fintech companies. We're seeing that play out in India. Of course, fintech companies not making any money at this point in time. But how do you read this, and what does that mean as far as JPMorgan's own plans are concerned going forward?
Yeah, so we have tremendous competition, okay? Indian banks in India, German banks in Germany, obviously the big banks in the United States. Then we've got shadow banks, which are huge. They've taken over a big part of the mortgage business. They took over a big part of direct lending, leverage lending in the United States. They've taken a big part of trading. You know, you hear about the high frequency traders and payment for order flow. And then you have fintech. And fintech, you got to look at, it's a huge amount of investment in it. Some are already quite successful. PayPal, Square, Stripe, to name a few. Others are around the fringes, data and a whole bunch of other services. And they're good competition. They also have very little regulation relative to someone like us, so they have advantages. But you know, a lot of them aren't profitable. They're not all going to make it. And obviously, we can spend a lot of money building great systems. So I'm for competition. I would prefer to see more of a level playing field on regulations. And then, but the other thing you didn't mention is big tech. I mean, you know, Apple now has a P2P, buy now, pay later, credit scoring. They white label credit card and bank accounts through Goldman Sachs, and that's a bank. They don't have social requirements, legal requirements, the same AML requirements. They don't have capital requirements, registration requirements, transparency requirements. You know, and at one point, maybe the regulators will eventually say, okay, if you do a product, the product should have a certain type of regulation. And but anyway, we're going to have all the competition. I'm very comfortable about JPMorgan. But it's going to be a lot of competition, and there are going to be a lot of winners and losers.
Well, we would have loved to talk more about the winners and losers and about your plans, but we've run out of time. Jamie, it's always a pleasure. Appreciate you joining us here on CNBC TV18, and we look forward to seeing you back in India soon.
Next time in person, keep the faith, everybody. Thank you.
Thanks very much.